6 names to add to your watch list right now based on my high five trading strategy. Let's get into it. Name number 1 is going to be Disney. So as we see on the chart here, we have this beautiful cup and handle forming. Disney's been in the gulag here for about 2 years now. They're finally getting some consistent wins on their earnings. They're finally getting back in a good place. Things are finally settling down. They are getting in a better margin place, and just overall operating income and free cash flow. Everything's getting back to post to pre-COVID times. It seems like for this name, so looking really well, looking really good on this name. Cup and handle. It is not a trade yet. Again, these are watch list names that you need to add to your watch list and set some alerts and be ready for when they do break out. But we're going to go through it real quick. So we have the cup and handle. We need to break over 125-ish area. We have this massive volume shelf right here with this beautiful volume gap right here up to 150 with another volume gap up to about 170, 180-ish on the charts. We have a green indicator, meaning that which takes in price. It takes in candlestick patterns. It takes in MACD, RSI, and your trend. And when everything's pointing in the same direction and everything's aligned, it flips to green, as you see here. But I like to take it a step further from when it flips to green. And actually, just looking at this chart, you have this beautiful little bull flag right here that you could have got into, right? So it flipped green here, right under the bull flag, and then it had this massive run up. But it was aligned with earnings, and playing earnings before you get this massive run up is honestly a no-no in my opinion, unless it's broken out or retesting going into earnings, and I'm confident that they're going to beat on earnings. I don't play around with earnings just because they're too volatile. Even if they beat everything, they could go down. But so we missed that, but really it was because of earnings that they ran up so much. So we missed that, but let's get into this cup and handle, right? So again, a break over 125-ish would be very bullish, and that would be your entry price there at about 125-ish. You could run you could I'm personally going to take shares and options, let it run up, and then take a little bit off the top and then have it pull back, re-add with the profits, and then let it run to the profit targets, as we see there, right? So again, this is a weekly chart, so just keep that in mind. This is not going to be like a day trade or even a swing trade. Sometimes it happens in a swing trade time frame, but this is more longer term, as this is a 2-year cup and handle pattern. So it could take 2 years for this to play out, in my opinion. And based on what I've seen with the strategy, it usually doesn't take that long. But first profit target is going to be 150. Next profit target is going to be 173. First profit target's due to the volume shelf gap fill. Second profit target is due to the measured move from the bottom to the top of the cup and handle pattern. So about a 37% move. We also had our Williams R percentage create the Williams consolidation box, which I coined and personally use as a strategy. And basically what it is when you run up to this barrier, which is the barrier that's never been broken before, when you run up to this barrier, you're going to bounce off of it. I want it to have a big pullback to above 40 or 45 area, somewhere in here. I want it to have a push up, a snap back, and create this box. Wherever it snaps back to, we've created the box. So you could just call it here, or you could call it up here. I'll just call it the lower one at about negative 25-ish. So we create our box. And so now, as long as we stay in this box and continue sideways and bounce off the walls like a crazy person in a room, right? This stock will continue to rise, not in a straight line. It's going to be up and down, right? But all you have to look at when you're running this strategy is that your Williams consolidation box, you're still in the confines of the box, but also your high five indicator stays green along the way, sending the stock higher and higher and higher. Those are the only two things you have to worry about. As long as this stays in the box and as long as the high five stays green, you stay in the trade. You take profits 1/3 or 1/4 there, 1/3 or 1/4 there, and then you let the rest ride. That's it. So that's Disney. Let's move on to Adobe. Warning, Adobe is reporting their earnings today. So as such, with them reporting earnings, and like I just told you, we are not broken out of this beautiful bull flag that we see here. We are at this beautiful little volume shelf though. We are not broken out of any pattern. And when we're not broken out of any pattern, I don't care that the Williams or the high five strategy and the high five indicator flipped to green here. I don't care because you have two things happening here. You have earnings today. You are not broken out, so it is not a complete high five trade. Also, you are running into the barrier. And what did I just say? When you run into the barrier before I enter a trade, typically, unless we've already broken out and the high fives already met besides this, I want to see a pullback, establish support, create your Williams consolidation box, and then get in. Once you get this tick up and you have this confirmation that you form the box, you have a breakout, you have a green high five indicator, you enter the trade. I'm targeting 699 or call it 700 for all-time highs as the first profit target. And then the second profit target is your measured move. And your measured move is essentially taking the bottom of the flag to the top of the flag and measuring out from the breakout point. And that's how you get your measured move. Like I said, massive volume profile shelf. And yeah, again, add it to your watch list. Let earnings cool down. 3-day rule is in effect. Typically after earnings, people say give it a 3-day rule. If they do really well on earnings and they bust out up here, do not take this trade. I'm just going to be completely honest with you. Do not take this trade if they bust out up here. Why? Because you're at the top of this and you're going to get a pullback. So either here's what's going to happen, guys. There's two ways you can get in this trade. One, they're going to stay in here and you keep it on your watch list until they break out and the Williams consolidation box is in a better place and it's formed. Or let's say they kill earnings today. They break out. I'm telling you, because it's up here, it's going to have a pullback. And 80 to 90%, like I always say, 80 to 90% of charting patterns pull back, come back to the scene of crime, retest before they continue higher. So you have two entry points. One, we could crush earnings today, do not enter, wait for the pullback. 89% of the time that happens, 80 or 90% of the time that happens, and then enter here and then continue higher. Or it doesn't have a good earnings today, pulls back in here, but creates this consolidation box. Then you wait for the breakout and then you enter. Cool. Let's move on. Workday. I've already called out this name. It's looking good. There's a couple of patterns on here. I really just don't care about any of them besides if I'm being honest, I don't care about any of them besides the cup and handle. And the biggest reason for that is, yes, you're green on the high five indicator, but at the same time, this Williams consolidation box is way out of whack. You see how this one's nice and tight up here and it continued to run. Well, that's really it. None of these other ones were really that great. Maybe this one right here or this one right here, because that's down to about 40. It's less than 45. So that's still a good box right there, right? This one though, this one got all the way down to 61. And so because it got all the way down to 61, I don't like it. I would like to see this come back up, fly back up to the barrier, then pull back, create the box, and then continue sideways. So I was thinking about getting into this due to this, but no, I'm going to wait until we get this breakout of this cup and handle pattern. Because if we get the breakout of the cup and handle pattern, we have a massive measured move of about 59% up to about $490. And you could throw in another profit target here at 490. So you could say enter when we do get this breakout over 310-ish, you enter the trade. You take 1/3 out at 400, you take 1/3 out at 490, and then you let the rest ride until the Williams consolidation box and or the high five indicator go against you. Launching off this volume shelf, pretty much it. But again, I'm not going to do anything until we get not going to do anything until we get some confirmation and get this Williams consolidation box filled. And obviously we break out here. So that's Workday. Let's move on. DraftKings, also talked about this name before. It's still on the watch list. Another name where we have this nice bull flag and we have this measured move up to $74 with the bull flag. But at the same time, well, I haven't even done the measured move on the cup and handle. So let's do that real quick. There to there. So the cup and handle measured move is going to send it to all-time highs. Let's just call it $94. Just call it $94. And that's going to take us to all-time highs. And our first profit target's $74. And yeah, same thing with this one. We have this bull flag right here. But again, I'm not going to play this bull flag just because we are already pretty far away from it. We already had our consolidation, our breakout, our retest, and then our push higher. And now we're having another pullback to the 9 EMA. We're having another pullback to the 9 EMA right here. It's forming this handle. I'm already in enough other names at this point that I just want to have a watch list and be prepared. But let my other like 18 stocks that I'm in as trades and some investments play out before I get some more capital underneath my belt and then work to get in these names. But you could get into it if you wanted to, but you could get a pullback back down to the bull flag of about 19%. Not likely though, honestly. If I'm being honest, not likely. It looks like if you enter this name, you could have some consolidation here and then continue higher up to about $50. So you could make yourself about $9 per share on this trade and then maybe take your profits and then wait until a breakout. But you gotta play your own book, guys. I'm not playing it, so I don't have entries and exits at this point. I just have it on my watch list. A break over 52-ish dollars means we have broken out of the cup and handle. As long as our Williams consolidation box is still within the confines, then I will enter this trade as long as the capital is there and I find it rewarding enough, which it is at 47% and 81%. But again, I'm just going to wait this one out and hang out with my other trades. Number 5 of the watch list and second to last one before we get into ASML, we have Talk. This is a small, very small cap, $583 million. So be careful with this one. I'm only considering this one because somebody on X that's a very good content creator, MC Investing, likes this name. I looked into it. I like the fundamentals. It looks good on my high five investing strategy spreadsheet. Everything looks good with it, so I have it on the watch list. Just be careful; it's going to be a volatile name. It's a super small cap, at less than $600 million of market cap. But let's go over it. So we have this volume shelf. We have this volume gap here. We have a beautiful cup and handle pattern. When we break out over $4.07 ish, then we have a confirmation of the breakout of the cup and handle pattern. Like I always say, you'll break out most likely, run up. So if I had to guess, run up to this volume shelf right here, have it pull back to retest the cup and handle before heading higher. Also, at the same time, we have a green high five indicator. We have a Williams consolidation box. You see how this ran up here and then had this nice pullback down to about 28, 29-ish. And now we have this Williams consolidation box built. And as long as we stay sideways in there, we'll continue higher. And these small caps names that, it's run a little bit, but these ones that haven't broken out yet, these are your bread and butter right now. If you're trying to chase like the quantum, the quantum computing and all these other trades that are literally flag pulls like this, and you're trying to get in up here, you're asking to get rug pulled down, and just lose a ton of money, guys. Look for the trades, have a watch list that are trades about to be set up, manage your current trades, and then that's it. Whenever the watch list trades, when watch list setups become watch list trades, you enter and then you pull them down into your trades. And that's it. And you just keep updating your watch list with the best of the best setups. And that's it, guys. It doesn't have to be that complicated. Stop trying to chase these large flag pulls that are gonna rug pull you and just come flying down. Okay, like just stop, because I'll show you right now why you shouldn't do that. Boom! Look at that. How many people do you think got into this D-Wave Quantum? $1.21 billion market cap, super small, quantum computing. They probably got in up here, right at above $5, and they got absolutely rug pulled today for over 18%. IonQ, absolutely rug pulled today. RGTI, not rug pulled yet, but look at that flag. This is a post I have later coming out. This is what, when people ask me about these trades, when people are like, "Hey, what should I do with this trade?" I'm honestly just gonna put a flag on it and then send it out to them. Not to be a dick, just to joke around a little bit, because nobody knows, guys. I mean, I can look back at history and be like, "Yeah, here's." I know we're getting off topic here. I'm sorry. Here's support. Here's resistance. Here's support. Right? Anybody can do that, but like to sit there and be like, "Hey, what's the high five setup saying for this?" The high five setup is saying what everybody else is saying. It's a giant flagpole, and you're gonna get rug pulled. Look at this other quantum name today. Giant run up. Whoop. Giant run up. Consolidated rug pull. So yeah, just be careful with these names. Stop chasing. Like, these are way gone. Maybe there was a some kind of triangle pattern in here that it was breaking out of, but those are gone. Those are way gone now. So don't try to get into those. Be early to the party. Be early to the party, like Fubo here. Look at this. Fubo working on a breakout. It's gonna fly like those other names. NVTS had this breakout, already up over 60%, guys, and I think it's going to consolidate and then head a lot higher. Get into them early. Put them on your watch list. Manage your trades. That's it. It really doesn't have to be that complicated. That's all you got to do, guys. So, sorry. Back to talk. Cup and handle. Williams consolidation box, good. Launching off a shelf, volume shelf. Measured moves up to 756 and $10 for a total of 149% move if we get it. And yeah, looks good if once we get this breakout. Last name, more technical analysis than it is actual setup. I will say this high five is rounding out. The high five indicator is rounding out. We're about to flip to green here, but again, none of these are trades that you should take right now. I will repeat that. None of these are trades you should take right now. These are all watch lists. Put it on your watch list. High five setup watch list. Put it on your watch list. Put your notifications. Just click here, add a notification at that price or a little bit before it, so you're notified when these are breaking out or about to break out. That is when you enter. You do not try to front run a pattern breakout or try to front run saying, "Oh, this is about to flip green and this is about to break out, blah, blah, blah." No, that's not how you do it. It's not how you win in trading. So, my whole thing on ASML, I really like it on the fundamentals. They have a massive moat. We had this cup and handle. We broke out. We did not reach our measured move of 51% up to $1,125. We did not meet the measured move, and the measured timeline goes out to January 2026. So, bringing me to my assumption that we didn't hold this really strong, which was once resistance. We didn't hold that as support. We didn't create it into support, so now it's resistance. We need to break back up over this, launching off this volume shelf, and then come back and retest it. Flip this into from resistance to support. Flip it from resistance to support, and then once we do that, We break it, we come back, make it support from resistance, and then continue higher. My theory on this trade is that we have a volume shelf. We're about to flip green on the high 5 indicator. This was a lick grab, a liquidity grab, meaning they're just stop loss hunting, flushing out, looking for shares to buy in and then to scoop up and take other people's shares and then launch it right back up. It all makes sense with the fundamentals as well and where the sector is. The sector has been weak for a little bit after its crazy run up. And yeah, things are just resetting. And before I believe it's going to have another crazy year run up to higher heights. So at the same time, you have a divergence on the Williams R percentage. You're bouncing off the bottom of the Williams R percentage, the support line, the green line, and you're heading now towards the high side of the Williams R, while subsequently you have a high 5 indicator about to flip to green, about to fill this beautiful volume gap. Price targets are at 883 and $1,125. Those are 6 setups that you need to add to your watch list right now. Hope you enjoyed. Let me know which ones you like and which ones you're adding to your watch list in the comments below. Thanks, guys. Catch you in the next one.